Everyone, and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Let's take a look at the markets today, and as you can see, it's been a bit more of an active day in the markets. Most of this trading week has been relatively slow on the data front, news flow as well. We're looking a bit light this week, but we saw things pick up yesterday, of course, with the Bank of England meeting, which we and press conference, which we touched on yesterday. Today, the focus is around two key subjects. The first one is GDP data from the Eurozone and Germany, and we also had some from Italy as well. The key here being that we saw growth actually slowing slightly in the Eurozone in the first quarter, according to this preliminary reading, to 1.5%, 0.5% on a quarterly basis. The positive being that Germany, the main engine of growth for the Eurozone, actually saw growth pick up to 0.7% from 0.3% in the fourth quarter, and ahead of expectations of 0.6%. So mixed data really there. We did see a bounce in the DAX shortly after the data was released, reflecting the better than expected German data, but overall from a European perspective, from a Eurozone perspective, slightly weaker, although still just really a quite moderate growth for the Eurozone, something we've seen quite a bit of in recent years, and something we can probably expect to continue to see for a few more years to come. Yet we are seeing some weakness in the euro, potentially reflecting that disappointment to that data today. But though I say that, but the markets really do seem to be responding broadly to the US data and the US dollar. The US dollar is currently up 0.66%. It was already up earlier on in the day before the US data was released, which seemed to be hitting US futures ahead of the open. But of course, we are now open. US indices down around 2 to 0.3% at this stage. We are seeing commodities as well trading slightly in the red, again reflecting the strength of the dollar, the negative correlation clearly alive and well here. It's worth noting though that Brent and WTI crude both down around 1 to 1.5% today, but this is a very marginal move in absolute terms, and it's only a piece of the gains that we saw yesterday. So rather than being a reversal of any moves or a significant decline, we're only seeing it pair yesterday's gains, so nothing to be overly concerned about here. We are seeing copper down as well, marginally as well. Again, I do think the stronger dollar is probably playing into this somewhat. But one of the things helping the dollar strength today has been that US data. We started off with the retail sales. Now, worth noting that the consumer is an extremely important component of the US economy. Services sector makes up around 3/4 of total US output, of which the consumer is largely responsible for this. And therefore, if the retail sales figures and to an extent the consumer sentiment figures really are seen as a barometer for how the real economy is performing, because if the economy is performing well, then people tend to spend more money, and when people see the economy performing worse or God forbid contracting, recessions, depressions, then you tend to see that reflected in spending patterns as well. And what we've seen effectively over the past few years in the US with retail sales is, even though the economy has improved, we have seen a conservative consumer reluctant to go out and spend too heavily, which has really hampered US economic growth. And we were expecting to see something along the same lines again. We were expecting 0.5% core retail sales year on year. We were expecting, we were expecting 0.5% core retail sales month on month. Today, 0.8% overall. And we easily exceeded those expectations. 0.8% core reading, 1.3% overall. So it was a very strong reading that we saw today. I'm not convinced at this stage whether that necessarily puts June back on the table, although in my personal view, as I've alluded to on numerous occasions previously, I think the markets are massively underplaying the strength of the US economy right now. I think the Fed is open to a June rate hike, but at the moment it's absolutely not convinced the markets that that's going to happen. And with the markets only pricing in an 8% chance of a rate hike in June, the Fed, I'll be very surprised if the Fed does move to raise interest rates. Interestingly, we did have a comment yesterday from one of Fed officials, Eric Rosengren. He is a known dove on the FOMC, and he himself stated that he believes the markets are massively underplaying, or he didn't say massively, he said the markets are effectively underestimating the Fed's intentions to raise rates going forward. effectively is what a number of Fed officials have said, but when it comes from a dove, I guess it tends to carry a little bit more weight. Maybe having seen these retail sales, we'll start to see this factored in a little bit more, but I'll be very surprised if we see a significant change off the back of these spending figures alone. I think we need to see a lot more communication from the Fed if a June rate hike is actually going to be on the table. But this was followed up. We had the double whammy effectively with the University of Michigan consumer sentiment reading also rising to 95.8. Now, taking into consideration that we were only expecting to move to 91 from 89, this is a significant improvement in the University of Michigan consumer sentiment reading. It was the highest reading since April 2015, so in just over a year. We had been on a very much a downward trajectory since the start of 2015, so this is a significant improvement. Now, of course, the most important thing is that this improvement continues, which is yet to be seen. These are still only 1 month readings. If we take another turn to the downside next month, then they are borderline useless from the Federal Reserve perspective. We need to see sustained growth, not just one single month. But like I say, positive day for the US economy, positive day for the US consumer, and in my view, potentially this could be the day that we could see a turnaround in investors and traders thinking with regards to rate hikes, given what Eric Rosengren said, and then following as well with this very strong consumer data. Okay, that's all for this week, guys. I wish you all a very good weekend, and I'll see you again on Monday. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.